The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. So we're going to have Rich Anderson as our guest here at the half-hour break. I did want to start out the show looking at the FTSE 4-hour chart. As you can see, we're still completing that pattern. It's down a little bit from that high, but not pretty much insignificant. And you can see the DAX 4-hour chart. We're still up near the high. So these patterns, either they are completing or they're getting ready to extend more to the upside. I've been asked by two people to talk about, what's going on in the world. And folks, I don't follow the news that much, and I don't understand a great deal of it, even though I got a couple of degrees in it. It's a little overwhelming to me. But I will go through some of the things that I've gone through during these years. I first came to California in 1968, and that's when I met Twentyman, and I was at trading through Roy Longstreet's firm, Clayton Commodity. Roy Fassel was a broker, was up on the third floor there in the Howard Hughes building, and they were building the McCulloch Oil building across the street, a brand new 20-story high-rise, and Conti had opened up an office there. It hadn't opened yet, but Roy was going to move over, and so they basically took all the brokers from Clayton and closed that office and turned it into Conti Commodity, and so that's where I was trading. During that time, these are some of the people that traded at Conti Commodity when I first started. There was Mike Marcus. He was from Commodity Corporation, Ed Sakota, Bruce Covener, Jay Cross, Larry Williams, Ricky the Rocket Barnes, Jim Haddady, and Earl Sibbett. It was just amazing. Dave Nelson, there were just so many people there, and they shared a lot of great information and stuff. But the most amazing things about the change in the from what we're seeing now to all the stuff that's going on with Bitcoin and all this other stuff, I can just tell you from experience of what I remember, and that is in 1971. This is when Nixon took us off the gold standard. Maybe we're not even supposed to own gold, but the first person is one of the first people that I met in California was Bob Gamillion there at Wilshire Coin, and then Leroy at American Coin. And so I was, buying, selling gold coins and silver coins, numismatic stuff, of course, but I was still involved in it. And when Nixon took us off the gold standard, that basically said inflation's coming, but no one knew what inflation was. We just came out of the Depression from, 1932 through 1941. So this was only 1971. We're only 30 years past that. Nobody remembers what it was like. So inflation didn't really get kick off until 73, 74, and that's when it went crazy. In 1972, when I was at Conti, they started out with a thing called the Russian grain robbery. That's when Russia was buying everything that we could grow, and you could see it in the charts. I mean, beans went from $3.50 to $12.99, a record that held for 35 years, and corn went from a $1.20 to $5 a bushel. So these were tremendous moves, and I was very fortunate. I was very lucky and very fortunate, and all during that time, I was buying and selling. I started with a small account of about $30,000. I ran it up to a little over 1.2, and then from that point, I took 1.2 down to minus $2,700 back in October of 1974. I had a lot of fun on the way up. I spent a lot of money, bought a lot of things. And back in those days, we didn't have the CFTC or the NFA, and so you could trade with a debit balance in the commodity account because the commodity firms, they determined what the margins were. The SEC and the Federal Reserve was not involved with that, not like they are now. but you were able to do that. And so Conti said, just trade out of it until you get the debit balance and you can put some money in later. And I caught a lucky move in pork bellies, and I cleared that out. And I didn't trade again. I just studied for a year and a half when I got the Gartley book and really delved into that and went through the whole crash of 1974. And folks, everything I did everything wrong. Believe me. I mean, I added the losers all the way down because these cycles were bottoming, and I thought the 8-day cycle would bottom. Well, it would bottom. It would bottom on the 8th day, but the problem was it would rally for 2 days, and then it would be down for 6 or 8 days. So there was called high translation to the left. In other words, the cycles would crest to the left, and that's what happened. Well, I learned all that. I mean, if I hadn't came up to it, I never would have figured out what the heck's going on. And in 1976, after I studied for about a year and a half, I saw that move coming in soybeans and soybean oil, and got everybody that I could listen to, opening accounts at Conti, and we ended up making a pretty good piece of change, and that's what got me my job at Drexel Burnham back in August of 1976. I stayed with him through 1982. In January, I moved to the Chicago Mercantile Exchange, and that's when I started trading on the floor as a local, because I knew we were going to have these computers coming in and we'd be able to see all of our prices. See, we didn't see this stuff. The only way you had it was on a Bunker Ramo board or a Reuters machine. I mean, there was very little high-tech stuff like we have now. Now it's instantaneous. And so I knew that was coming and that I knew I could win. I just wanted to make sure that the trading that was going on was going to be fair. And after a while, I realized it certainly was. And that's when I met Byron Tucker, one of the first people that I met in January of 1982. And he was working with and for Leo Malamed, and I got to know Leo and got to sit in at some of the meetings and stuff, and it was really exciting because they were getting ready to bring out this new product called the S&P 500, and that was going to be something that was going to be, as you folks know now, very, very famous to see what's going on. And we've got a caller here from Rochester, New York. Dave, what can we do for you?
Actually, it's from Rochester, Michigan.
Michigan. All righty. Fire away. What do you got for us?
Larry, okay, there's been some bad news today, unfortunately, about the vaccine for Johnson & Johnson. And as a flyer, I thought that maybe that might be some new good news for Zoom, because, we were on track to get people out and about with the vaccines, but now the vaccine has had a little hiccup and another vaccine has a hiccup. So I'm wondering if Zoom might see some new light shed on it in a positive way. Could you check out your Fibonacci and anything and everything else in your magical wheel of miracle activity?
Dave, you're going to find this hard to believe, but there are no magical wheels. I just do a price chart, and we have a break coming up here. And what I'll do is, as soon as we finish this break, I will have the chart for Zoom, and you can listen in, and I'll show you what I see happening in Zoom. But really, Dave, there's nothing magical. They're just little lines going up and going down, and I try to find a place where the little lines say, maybe I better take a calculated risk on something. But I will do Zoom for you. But by the time the break is coming up in a few minutes, I'll get a chance to put the chart up, and we'll be able to talk about it. And you can, after we have the break here, you can just hang up and listen to the show, and you'll be able to see the Zoom chart. I'll go through it as best I can.
I'll hang with you too, though, if you want. We can chat. I don't care. Whatever you want.
Please do. Stay with us. We'll be right back with Dave from Michigan. We'll be right back, folks.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back talking with Dave from Michigan about Zoom. And, boy, you were right about it. It bottomed yesterday at around 318. It opened at 324 and rallied up to 338. So it's had a heck of a move. It's backed off about $5 from the high. But this market, if you look at this on a longer-term basis, Dave, this topped quite a long time ago. So I'm not sure how much it has to the upside, but it certainly had a good move early this morning. You were correct on that, and if you'd have bought it right on the opening, you'd have done pretty well.
Well, I didn't buy it at the opening, but how do you see the forecast for the next, I'll just say, couple days?
The next couple of days, I'll tell you why I think I'm a little bit negative to it, is that we took out the highs of April the 1st by 20 cents in this stock at 339 and change, okay, 339.18, and then now trading $6 lower than that. If that was really good, Dave, that stock should have broken out to the upside and should be trading north of 342 or 344. So I would be very, very cautious here in being long. I know with this vaccine, you hear the news and stuff, but, I'm probably the least qualified to how to handle the news, but this market's just not acting as good as it should be, even though it's up quite a bit. You're talking about it being up $13, and if it's any good, it shouldn't get any below 328. If it gets below 328, Dave, you're probably going to have a problem with that. So make sure that the stock doesn't go below 328. The thing that scares me the most is the fact that we took out the highs of April 1st by 10 cents. I mean, why wasn't there any buying there? And this stock on a longer-term basis has been in a downtrend for, several months. So I'd be really careful here.
Now, I'm hearing you real clear, but sometimes could there be like a turnaround, the fact that the vaccine is not giving everybody the hope that they have, and maybe today's news might spread through the, news media and the all the channels of the news that we have, and it might be a new spark for Zoom. Just saying.
All right. No, you're right. And I will tell you this. I'll give you a saying from my grandmother, because when I used to start doing these things, she'd always tell me that if ifs and buts were candy and nuts, we'd all have a wonderful Christmas. So even though they tell us all these things that are going on, that might not be what's going on. So there's fake news everywhere, not just in politics, but in the financial market. So just be really careful here. My suggestion to you is, if you're in this stock, if it closes below 328 or lower, and it's trading at 333 right now, I would not be long that stock. I mean, you have to ask yourself the question, why didn't it take off and take out those highs of April without any trouble? It couldn't take out the highs of March anytime during March, and it barely took out the April highs by 10 cents. Now, 10 cents on a $300 stock is virtually nothing. That thing should have gone at least $4 or $5 above there, just with, buy stop sitting in there. So that's what I'm looking at. I'm a skeptical old cowboy, buddy. So that's all I'm warning you about. 328 is the line in the sand. If you go below 328, I'd be really careful.
Okay, I'm all ears. I appreciate your wisdom, and stay healthy and stay well.
Hey, I am planning staying on the green side of the grass. You betcha. Thank you very much for calling in. We appreciate it.
Okay, God bless. Bye-bye.
Okay, you bet. All right, let's take another one that's in the news, boys and girls here. Let's take a look here at the old bit. Here we are here. We've got Bitcoin trading above 63,000 on its way to the ABCD pattern, as you can see here. We've been telling you about this for quite some time, and we've broken out to the upside substantially now. And we are trading just a little shy of 64,000, and that pattern comes in around 68,000 to 72,000 on this ABCD pattern on Bitcoin. And maybe it's a bubble, maybe it's not. All I know is these patterns are still working, and people are throwing money at it. So by golly, there's some pretty smart people out there with a lot of big bucks. So they may know something more than we do, but there is a possibility that is going to be a bubble. But, we'll have to wait and see if the bubble's going to break someday, and maybe it is, maybe it isn't. So that's neither here nor there. Now, getting back to these really key times, I was in Chicago with Byron. I was trading through Lynn Waldock, and I was hanging out with at Delshire Commodities, which was run by Leo Malamed, and Byron ran his desk, and we were visiting a lot, and they were getting ready to bring out this new contract called the S&P 500. And at that time, it was brought out in April 17th of 1982. But in August of 1982, something really significant happened, and Leo happened to be involved with this, and that is Henry Kaufman of Solomon Brothers came out and made a statement that the bond market had bottomed, and bonds were going to go higher and go a lot higher. And that was the bottom of the bond market, August 1982. The stock market had bottomed on August the 9th of 1982. So that started it all, and then away it went. And I will tell you a really funny story about this with Henry Kaufman and Leo, because they were friends. Do you know, here's what's really funny. Henry Kaufman is still alive and well. He's 93. Guess who his classmates were in high school, folks? Henry Kissinger, Alan Greenspan, and Henry Kaufman all went to the same high school in New York. So you think that the maple syrup doesn't stick to the tree, you better think twice, because it certainly does. They're pretty famous and pretty smart dudes. Okay, now I wanted to say one other thing about this comment about Henry Kaufman, and he happened to be good friends with Leo. And the story Leo told us later on, this was going back, I think that was from I think it was 19. It's about 6 or 7 years later. They had a meeting at Solomon Brothers, and they were thinking of going into junk bonds because it was 1988, and Milken and Drexel controlled the junk bond market, and so Solomon Brothers wanted to go into junk bonds. So it was at a board of directors meeting, and they were getting ready to make a vote on it, and Henry Kaufman stood up, and he was the chief economist. He was the number guy on Wall Street. I mean, he was one of the most famous dudes around, and he got up and he said, "Let me explain something to you folks. If we go into junk bonds here at Salomon Brothers, my partnership is for sale for 50 cents on the dollar for the next 36 hours after the vote, and that's the way I feel about it." And he left. He left the room. And Jerry Pegnan, who worked with Bob Miner, was Henry Kaufman's first assistant. He was a PhD from Colgate, and so he walked out of the room. Well, the funny part of it was, after he left the room, and Leo told the story about it, one of the directors got up and he said, "I'm going to vote with Henry Kaufman." He said, "If that tight Jewish SOB's not going to vote on it, neither am I." And Salomon Brothers never went into junk bonds, and it held them a great deal. They were later bought out by somebody. I forget who it was, but that was the story behind it. And anyway, those are just a few of the things that I remember. We got a break coming up here. We're going to have Rich Anderson at the break. We're going to talk a little bit about the soybean market, because it's still hanging up there at really high prices, and we're looking to be a buyer. We just missed the gold last night, folks. Sorry about that. We were a couple dollars off of the buy, and it just took off like a striped deer. And unfortunately, the headlights were turned off, and we didn't get it bought. So we'll wait for the next buy. We'll be right back.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're chatting with Rich Anderson of Anderson Capital Management out of Minneapolis, Minnesota. Rich, how are you today?
Doing great. Good morning, Larry.
Look, I want to ask you a couple things about the grains here for just a second, but would you mind commenting on, you've been around this business just about as long as I have, and we've got all this stuff going on with Johnson & Johnson, and people ask me, questions about, efficacy and all this stuff, but I posted a chart of Pfizer, and that stock topped a long time ago, up around 40, in the high 40s, and now we're rallying back today. We got up to 34 and change at one time. But how can the Pfizer stock be down, given the fact that they're one of the larger vaccine people for the whole world? I don't understand how that works.
Well, I'm not a fundamental stock analyst, but first of all, they didn't take any money from the government, so they invested massive amounts of money, and they came up with a vaccine, and a very effective vaccine, and they're to be congratulated for that. But they took a massive risk. I mean, talk about risk takers. That was the risk of all time. We're talking hundreds of millions of dollars.
Okay.
The challenge is the transfer has to be extreme. Minus 30, 40 centigrade, and that extreme cold transfer is a challenge because, hey, you've got to have the right kind of things, which they've developed their own packaging for that, and you got to be applauding for that. But the places that are going to receive it don't necessarily have the freezers to keep it that cold. So that's been the challenge, and I would expect that a fundamental analyst would explain stuff like that and explain that there are so many other viruses coming on. So, so many other vaccines coming on to fight the virus. And so they're not going to make a huge profit on what they've done. That would be my explanation for it. You'd have to have somebody that follows stocks more than I do. But I watched the story about the development of vaccine. It was amazing. And they didn't take money from the U.S. government. But their vaccine is the one that's least stable unless it's transferred at extremely cold rates. And then when it gets to end destination, you've got to have those kinds of freezers. And it's just not every place they could give a shot has that kind of storage capability. They don't have those kinds of freezers.
Wow.
So we got to put the limits on their vaccine until they develop a more stable.
All right, makes good sense. Hey, we've got a caller that we know. That's Mr. Z. John is calling from Philadelphia. John, we've got Rich on the line, and your question is about the corn, I guess.
Yes. Good afternoon, Larry and Rich Anderson. Thanks so much for coming on Larry's
show. You're welcome.
Say, Rich, the very specific question, please, for you, sir, has to do with the new crop soybean and corn futures. My very specific question is this. If we get adverse planting and growing weather, or the threat thereof, in your opinion, which of those two, that November beans or December corn, is likely to increase more, and why? If you could share share your ideas on that question, I'd be much obliged.
Well, as you know, the report came out last Friday, I believe, and the acres were up. In 2019, we planted 303 million acres. And that's wheat, corn, beans, peanuts, you name it, all the principal crops. But in 2020, we planted 310 million, and this last report last week was 316 million. Now, a lot of that increase in the corn, by the way, comes in the states of North Dakota and South Dakota. I farm in South Dakota, so close to my heart. That's where I'm from. But those states don't grow corn and beans as well as states like Illinois, Indiana, Iowa, Ohio. in actual fact, those states, Ohio, Illinois, Indiana, Iowa, Kansas, Nebraska, where they have the highest yields, their actual corn acreage is down 1.75 million acres, where the increase is in North and South Dakota. And think of it like this. It's depending on average rainfall. And they get maybe 40 or 50 inches of rain a year, and so they plant 40,000 population, number of seeds per acre that they're planting in the ground. Whereas in South Dakota, they might plant 20, 25, or 30, unless you're irrigating. And so the yield differential is, 20, 30% different. So those increased acres out there aren't as good as the decreased acres in the, Corn Belt states. And so I'd have to say corn. You have other things going on, like in Brazil right now, they've lowered their ethanol mandate from 13% to 10% for their biodiesel because they don't have a lot of extra beans. Number two, the bean export market for this time of the year, for the next 5 to 6 months, will go to South America because, they've been harvesting now and they're ready to start exporting. So I think the corn is sitting on top of a needle. And if there's one thing I've observed about the weather, and I'm not a weatherman, it's that we've seen extremes in cold and in hot, and wet and dry. And I'll be absolutely shocked if we have a perfect growing season this year. And take Brazil as an example. A third of their corn, their second crop corn, was planted late. And when you plant a crop late, well, that hurts you because then you're coming into the hotter period of the year, and they can't afford to have that problem down there. So, it's not just in the U.S., it's all over. And by the way, the one that nobody ever mentions, hard red spring wheat is grown up in is some in Minnesota, but mostly North Dakota, South Dakota. And the upper Midwest right now on the weather maps shows dry as far as amount of moisture, the drought monitors that they put out. So it's something to keep an eye on. But you have adjustments. You have like wheat's under the price of corn. They'll feed wheat instead of corn. Eventually these things all work out. But I think, look at these corn versus July corn, and they could be trading the same price at some point this year. And that,
very good, Rich. Thanks so much for that discussion. I really appreciate that, and I just hope between now and August 15th, I don't come out of this activity a loser. So I'm keeping my fingers crossed.
I see the chance bars up on the roof there, slim and none.
Thanks so much.
You bet. That was funny, Mr. Z. Rich, I wanted to talk to you just a little bit about something you told us about 2 years ago in 2019, to be looking for a low in the hog market because they're below the cost of production at $45 a pound. I posted a chart for it. The low was around 42, and now we're trading at a 106, 107. Do you see any end to this bull market in hogs, Rich?
Well, they're still having some ASF, is Asian swine flu problems in northern China, and they're a big demand. You want to wait until after the commercial?
Yeah, let's do that, Rich. If you have the time.
I'll hold it. Yeah,
great.
I got it.
All right. Well, we'll be back with Rich Anderson, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, we're back talking with Rich Anderson. And Rich, you were commenting about the hogs, and then I want to ask you one other question, and then I'll let you go.
Okay. Well, first of all, on the hogs, I mean, the highest prices occurred like in 2014 when we got up to $1.30. We had the swine flu in this country. It's a continuing problem. Obviously, the Johnson & Johnson vaccine's been taken off the table for the moment. So the reopening thing isn't going to happen as quickly as people thought, but there's still awful good demand for hogs. And you've got the Olympics in Japan. Pork is the main animal protein in both China and Japan. China's concerned about having enough of it. And so that's going to keep a good base underneath the market, a good underlying floor. Keep in mind that when we made our lows in the hogs, that was right after a pig crop report came out, and it was terribly bearish. So the key thing to watch, and this would be true not only for the hogs, but, you know, the weather markets for the grain, when it fails to react to negative news, you know, the prices are cheap enough. But when it fails to react to positive news, then the prices are too high and you need a correction. Right now, there's just continuing good demand. And keep an eye on the dollar, too, because to the rest of the world, the price they pay for stuff is based on the price of the commodity multiplied by the dollar value. So the dollar's been strong right now, but if it turns over, and like I think could easily happen in the next 6 to 9 months, you know, that could give another boost to our commodity prices. But I think the next 100 days that the Olympics starts, demand will continue to be positive out of Asia because that's their meat. And restaurants, you know, the thing when the restaurants eventually reopen, and maybe it's a year from now, that's when the beef market, you know, will find its time in the sun. And so the next year's cattle markets are probably something to start keeping an eye on.
Yeah, I know.
I know most people look at the front month, but, you know, I look at everything.
Rich, you were a young man many years ago when we started the Russian grain robbery, and I know you were trading at that time. You had just started into business. Do you remember? I believe it was a report that came out. It was very, very negative, wheat, corn, and beans, and the market was called, limit lower. And then all of a sudden, the calls come in on the squawk box. Oh my gosh, looks like we're going to open unchanged, and they ended up opening limit up and went limit for a few days. Do you remember that day? I think it was 1971. I mean, it was. I can remember being at Conti and listening to Ivan Auer. He was so excited that he just literally just about busted out of his skin. He was so screaming, "Oh my God, they're going to open limit up! They're going to open limit up!" And did they ever?
Yeah. So it's an unexpected action from what a report says. That's what you really want to key on, whether it be animals or grains. Yeah. Or frankly, stocks and sure. Their earnings and stuff like that. But expectation, and then what does the market do with that? That's why I tend not to trade in front of reports.
Oh, me too. Hey, listen, I'm taking too much of your time today, but thanks for joining us, my friend, and we'll have you on again when something real exciting comes up that you can help us with. But thank you, Rich Anderson, out of Eden Prairie, Minnesota. Thanks, buddy. Appreciate it.
You bet. Have a great day. Trade well.
Okay, thank you. Okay, I posted a chart here of the U.S. dollar index. You see we've been down 10 days now. We've just broken through the key 38% retracement level at 9,200. It looked like it was going to hold for a few days, but it didn't, and now we've had a little movement up in the euro. It's still a little too early to call the death of the dollar here. I know there's a lot of things on the internet about the death of the U.S. dollar, how everything is going to go to hell in a handbasket, and it certainly might. But this chart, still short-term, still looks bullish. We have higher tops, higher bottoms, and we're very, very oversold now. So I could not chase the euro or anything like that. I have no reason to. But that's what we're looking at here is we did break through that 382 support in the U.S. dollar, but we're down 8 days in a row, so that's not unusual, and we haven't shattered it by a whole lot. The number was at 9,200, and we're at 91.99, so it's not the end of the world as far as the U.S. dollar. If we see something like that happening, we will certainly let you know, but right now we don't see anything like that on the horizon that the total dollar is going to collapse. If it gets down below those lows we made 3 or 4 months ago, oh yeah, then you got really big problems, and this thing could literally go far, far lower than you ever want to think it could go. So those are just a few things. Now, I want to update you on the Apple. If you remember, we had Apple on here yesterday to be watching the Apple at that 133 level. I don't know what the high of the day was, but the 61% retracement comes in at 134.04. So would one of our kindly technicians here at TFNN tell me the high in Apple today? Because the 618 is at 134.04. And the high of the day was 134.50. So, and where is it trading right now? Anybody, Bo, you want to tell me where the last price is on Apple? My guess is it'd be a tad under 130. Oh, it's 134.46. It's right off the high. So we're right in the ballpark here to see whether it's going to break out. And this is a really, really important 61% retracement, folks, because that's a 61% retracement of the whole move. And so we're going to be interesting to see how this holds up, because the market is still, acting pretty strong. When the news about Johnson & Johnson came out, the S&P, if you remember, let's just get this up here to tell you again, because the same thing happened again today. If you'll see here, you'll be able to take a look at we were looking at a potential high up there between 41.30 and 41.20. The high last night was 41.27, but we broke 25 handles. We broke down 25 points and came back 25 points in a matter of an hour. So I was telling you that the market really wanted to get it moving, so it's going to be seeing, what's going to be happening here on this S&P, because the rest, the Russell looks very poor. The NASDAQ is a little stronger, but the Dow Jones is still hanging up there pretty good, but it's still down a little bit on the day. But Russell is the weakest of the group, and that's what you want to do, is to be like the old leopard, go for the quail or go for something that is the weakest to try to feed yourself. So we'll keep a close eye on these as we look at some of these things. things. So, but believe me, these things could literally go a lot higher, folks. And the reason why is you got things like Robinhood and Read It and Coinbase. Look at Coinbase, folks. He's going to come out with a higher valuation than the New York Stock Exchange ICE index, and also twice as high as the NASDAQ index. And it's going to be, I believe, it's got some ridiculous numbers that when they said this IPO for Coinbase, what it's going to come out at. I mean, it's amazing. We've got Bitcoin is 33,500 and change, and we got a 3 drive pattern up there at 37 to 38,000. I mean, what am I talking about? 67,000 to 69,000, and if we're up 3,000 today, I mean, you're there at the target tomorrow. So these things could easily run, and they all run together. So pay attention to them. So that's what we're paying attention to. We're going to take a little break here, and then when we come back, I want to feature a couple of commodity charts that I think are interesting.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Okay, folks, we're back, and I posted a chart of the natural gas, the daily, and then also the 30-minute. You can see the 382 retracement there. And the importance of that is once we get above that 382 retracement like we did today, that is a very bullish sign because it took so long to get there. Then it backs off for just about a day and then goes blasting through it. That tells you that that market is ready to go higher, and the daily chart shows you that the bottoms have been higher, and that's what we've been looking for, is to see this market starting to move higher. Regarding the crude oil, we're still in that trading range between 61 and 58. I don't think too much is going to happen until that comes up. And where is the buy on? I don't know what that means on pin 1. I don't what that means, Mr. Z. Platinum. Oh, platinum. Mr. Z, I haven't looked at platinum in a long time. Let me take a quick look at it. I believe we've got to get above the. Hold on, where is that puppy at here? I know I've got it here somewhere. Yeah, here it is. Just a second, Z. I'll get it up here. We've got to get it above the. Hold on, Z. It's got to get above the 1250 level. That's where we've got to get it above that. That's what we're waiting to see if we can break out to the upside on that. That's equivalent to 1760 in the June S&P futures. If we get above there, folks, that's extremely bullish because that's an ABCD on the daily, a 3-day pullback, and a break above that. That's just like that chart of the natural gas. They're totally different commodities, but the pattern's the same thing. You back off, you think it's a top, and boom, away you went. We had a buy-in last night on the gold. We missed it by $6, and it rallied $36 from that level, but sometimes you get them, sometimes you don't. But we're still waiting to see one more move down to that 1717, potentially 1718, 1720 in June. Gold is where we'd like to be a buyer. Whether we get that or not, I'm not sure. But it's a source of frustration, as they say in the trade. Hey, live every day in an attitude of gratitude, and may God bless, and take care of your neighbors, folks. Some of them need a lot of help.